Okay,
Hello.
here we go. Starting on time. I can hear you, but I still can't see you.
Wow. Strange. I see you. It says my
Yeah,
video.
you're just like a white screen.
Let's see if this does anything. Nope. That went to my phone.
How about like just like um unplugging and replugging your um your
Yeah,
camera?
let me try.
It's just completely white, which I don't even know, like I don't even know how that happens. Oh, I see you now.
You see me?
Yeah.
Hey, I made it. Still?
Yeah, I see you, but it's like very weird. Like I see you in a picture, but it's still white on my screen. Here, let's just see if like how it appears when you talk here, and then maybe we're just good to go.
Is it
Yeah, it's
working?
just like Zoom is being weird. I see both of us.
In the live stream, you see both of us?
Yeah,
Okay. Okay, so I guess we're just good to go then, right?
yeah, we're gonna go. I don't know what's going on with this white thing. At least we started on time today. Here we go. Let's kick it off.
All right. So, yes. So the YouTube is all that matters because that's what I need for the rest of the week. Okay, so last week we talked about the signal shown in the Prospero app, and it seemed that people really enjoyed that, and it made a big impression on them, and they liked hearing about it. So I got a couple questions about the charts that are shown underneath in the Prospero app, and if we could talk about that and explain those, that would probably help people.
Yeah, that should be pretty easy. You know, essentially what you're looking for, especially with not option sentiment, which is obviously like our most powerful metric. What you're looking for there is you want to kind of see a few different things. You either want to see a consistent up movement without like big glitches kind of downward, or you might say volatility downward, like a lot of movement. Or obviously, if it's a short, you're looking for the opposite. You're looking for consistent movement downwards. Looks like I'm getting some glare off my glasses. I'm taking it off. Um, and and basically, like the other thing is there are things that there's volatility in. Like the famous example with Tesla that we use, we did basically still see some volatility and essentially like reduced volatility. So one of the things in terms of that can be very helpful to people is essentially just looking at um, if there are something like obviously higher lows or higher highs on a long, or lower lows or lower highs on a short, that's really key in net option sentiment. And the kinds of things that I'll do when I'm talking to people about it is I'll say, okay, like what is this value? Like at end of the day, it's either a peak or a valley. Like when was the last time it was above this? And something that's going in our like kind of crowdsourced portfolio on Discord, which is really interesting. If anyone's interested in learning a lot more about Prospero in the form of joining the Discord and monitoring stocks, one of the things that I often tell people is, okay, like maybe it's, maybe you have a net option sentiment that's going between say like 80 and 20 pretty consistently. The key is that, if it was 20 the last 3 days or 4 days or around that, and then the new low is 25, some people will say, oh, that's bad because it's 25. I would look at that as good because it's going in the right direction. It has a higher low. So it's very important on those graphs to look at the behavior to form your interest in it. And the other thing about that, though, more specifically, is that like for long-term stocks that say have high profitability and growth, I will tolerate net option sentiment being volatile if I plan to hold it for a long time. But what I won't do is choose a stock as a short-term, long or short, if I see too much volatility. That to me says there's too many trades, basically too many swing trades being placed on both sides, and there's not a clear institutional direction in which way they think the stock is going to go, like kind of amongst different institutions. And that's always kind of the most important thing for me. And that's kind of the most important signal to use. Social sentiment is different. And I use social sentiment. I don't think it is good enough to use on its own. I don't like to form purely social sentiment based thesis. What I do like is if I see social sentiment either being good to support a long that I already like, that's great, or bad in a short situation. And that's really what it's more about than anything. where it's just like, I like to see that social is starting to agree, or the trending is starting to agree in the direction that I go. And that's the same kind of thing. There can be volatility in that metric. All the same things I said about net option sentiment, where you're looking for the more kind of a consistent rise, the more you see higher highs or higher lows for a long, or the reverse for a short. That is exactly what you're looking for on that signal. Upside breakout and downside breakout. This is the one thing that can be confusing to some people sometimes. And just quickly to review, both of those are kind of like our most complex signals. And those will look at everything from, kind of the same things that net option sentiment does in terms of where institutional bets are being placed in the options markets, except they're looking at long-term options expirations instead of short. But whereas that's where it starts and ends for net option sentiment, for upside breakout, things are layered in additionally, like price targets, analyst ratings, index moves, things like that, as well as momentum factors. So what you're looking for there in those signals kind of, will move a lot slower, I would say, and you'll see less volatility traditionally than in net option sentiment or net social sentiment. But, what you're looking for there is absolutely directionality, especially if you see kind of like a consistent rise in upside breakout going up, and upside breakout going up, and downside breakout going down for a long, obviously, and then the reverse for a short. But that kind of consistent direction is important. But I would say, especially if you're a shorter term trader, the important thing for those are more the absolute values. Yeah, you want to pay attention if the direction is there, but like even if a stock goes from 85 upside breakout down to 80, and then like 30 downside breakout up to 35 as an example, I would still say that's not enough. Like, it's something to keep your eye on, but it's not enough to affect what you would call a good short-term thesis. And I would say that's even more true as a long-term investor, where it's just like you can kind of look at the short-term signals as more of a suggestion to your thesis. Like if you see something with, say, a 90 upside breakout and a 10 downside breakout, and let's say like 120 combined profitability and growth, like that's something that you might want to hold regardless of what's going on with net option sentiment, especially if you're a long-term trader by nature. I would say, can even kind of ignore that kind of thing. So a lot of these signals are built and organized to make sense for how you would use them and how you do trade or invest. And that's the important thing. It's not to get you out of your strategy. But, as we've talked about in the past, a lot of people will use something like net option sentiment or net social sentiment to figure out when they want to time more either dollar cost averages into positions, or enter a position they've been thinking about that's going to be long-term and just time it right. And the same thing is true in the reverse, where if you see something that's, might be trending in net option sentiment, like, you see it going 40, 50, 60, it's going in the right direction. 60 is not necessarily like an investable, net option sentiment on its own, but you could basically say, what, I might take the risk that this is going to keep rising because it has good long-term signals that I could hold anyway, and that de-risks it for a little bit for me in that fashion.
Awesome. So I'm happy we covered that, and hopefully it clears up any of the questions that people had about it. And I have some breaking news to tell you. The predictions came true. Twitter is dead. There's no more Bluebird. It is now the X app. And how bullish are we feeling about this change from Elon?
Well, I think that the important thing about the X app is, like, I don't know how closely I follow Elon Musk closely for a long time, and X is his like everything app that he's talked about for a very long time. And so this has always been his plan. I wouldn't consider this a real surprise. But what I would say in terms of like what it means and what it means for Twitter is, like, before that he announced that there was a pretty big long-term investment in AI. He's obviously made that announcement on Dojo with Tesla. So I do actually think that, this might actually be, good news for Twitter. Like, a lot of people, like, I can't speak to the effect of the brand and how many people use it for the brand. And it seems some people are pretty annoyed with them anyway. So, I don't know that. And obviously a lot of their users, and I was actually talking about, I was hanging out with some friends this past weekend at a birthday party. And one of them, happy birthday, Craig. I believe it is his real birthday today. I was at his, he says he watches the live streams occasionally, so I might as well throw that out there. Um, but one of the things we were talking about was that, how important the content, and he uses it for basketball news. Like I personally like use it a lot for, the reason that we started doing our most heavy investments on, on Twitter, is because that's where I got my finance news for a long time. And so I was just like, okay, I might as well do that because that's where all the breaking news, anytime some retail investor sends me something, it's almost always from Twitter. And that's why we invested there. And yeah, I think there's it has a unique place, I think, for a lot of people in terms of the content it produces. And that is, I think, where its strength is. And everything about X is what I've understood about X is I think there's WeChat in China. And I think you could obviously pay people through that. I think you can order stuff and everything. And I think that is what his plan is when he talks about X and when I've heard him talk about X in the past. So yeah, I definitely think it is interesting. I don't know, it's really hard to say what will happen and if it'll be helpful or not to Twitter. He obviously has a long-term vision. I think a lot of, obviously, the ad sales are down and that is not helpful to them. But it could be something that he makes Twitter into a bigger thing that is a bigger draw, and it can has more features, and it's kind of even bigger than a social media company. That could be something that makes it very interesting long term. And I think I saw him incorporate X in a different state 3 or 4 months before this, so he's been planning it. But yeah, it's the kind of thing that we've heard. I've talked a lot about Elon Musk, and my feelings for him are very complicated because I do think comparing, I've heard him compared to Zuckerberg a lot recently, and I would say, unlike Zuckerberg, he's actually doing things to push forward humanity, and I appreciate that in anyone. He's gotten too big of a head about it, but he's smart, he's driven, he really does work hard, and I do think he really does care about making progress for humanity, whether or not that's always the most guided thing, or is it misguided? Yes, probably sometimes. But I do respect that about him, and I would never count out any of his ideas until we saw them come to fruition a little more.
Mm-hmm. Now, you mentioned how X is going to try and become an all-in-one service app for everything that you can think of. So I'm wondering now, are apps like DoorDash, Uber, Venmo, Cash App, should they be worried about, because Elon seems to be the type of guy where he gets an idea in his head and he's able to carry it out. So should they be nervous that he's going to encroach on all of these businesses?
Definitely. Yeah. Because when you think about it, the more you can have in one place, just using Uber, for example, right? I used to be more price sensitive between Uber and Lyft, but now I use Uber a lot more because I use Uber Eats and they're sending me coupons all the time, and they started to give me these cash rewards. And I think that's the thing about capitalism and scaling businesses. The more, not only the easier the access is, but the more you can reward your loyal customers by using joint benefits from everything. Yeah, I think they should be worried. I think he can execute. He's the kind of person that can execute on this idea. And he's also the kind of person that's imagine if it's integrated well to Tesla's, and Tesla becomes the big company that the market is basically pricing it to be. Imagine if X is the only thing that you're going to use in your car, and you're ordering things and making posts or whatever, and you're talking to it. He could easily execute something like that, where he could blast Starlink to those cars, and he could say, hey, there's free internet in Teslas, but only if you use X. Who knows? I could easily see him doing that. He's got his fingers in a lot of pies. And yeah, he's the guy that innovates better than anyone. And as someone that, I would say innovates on new, I would say, ideas better than everyone. Obviously Apple has their own, I would say, product design, that kind of thing. They're the only ones in the same conversation, but he thinks of completely new things. And there's a story I think about him with SpaceX. And like when he was starting it, and I actually heard this in a Twitter live that I was on with Wolf Financial. And yeah, basically like what was said was that he was asked as he was starting SpaceX if he knew anything about rockets. And he was like, no, I don't know anything about rockets, but he's like, I've started to read about it and everything like that. And it's just like, that's the kind of person, and like, that's the kind of attitude I try to instill in myself too. Like, I'm not where he is by any means. But in terms of like some of the predictions that I've made when I was younger, that's enabled me to start this company. Like, a long time ago, I figured out how to predict mortgages better than anybody else at my like over 2,000 person company, because I figured out that people actually paid their loans a lot more because of state laws and how long they could not pay their mortgage, versus like debt to income ratio or anything like that. So, I think that was an example of like someone more senior than me at that company told me I couldn't do it and it wasn't possible. And what I did is I basically like turned state laws into math and then used it to create a model. But that's a smaller example of like something that like I think is the kind of attitude that he has, obviously to a much greater extent. You can obviously, like, the more capital you have, the more you can just be like, no, I'm going to do this. I'm going to start building spaceships. Obviously I'm not even close to being there yet, but that is an attitude that I really respect. Someone that is able, and I think that is why he is able to continue to innovate like that, because whether or not he even knows the details about something is not an obstacle in whether or not he thinks he can do it or whether or not he's going to try to start building that. And I really respect that. And that's why I would bet on him more than any other entrepreneur, regardless of what he's doing.
Yeah, I kind of agree. And you mentioning the spaceships reminds me of this like viral clip I saw of him on a podcast where the point of the starship was like a more rounded, and I forget which movie it was, but they had a more pointy point on their spaceship. So he told his engineers to engineer a pointier thing to make it just like the movie. And they were like, oh, well, did that make it more ergonomic and like better? And he was like, no, it's arguably worse. It's just funny because it's the movie. He like maintains this sense of humor about life that's it's inspiring from like this billionaire entrepreneur businessman that not most maintain. Like you think about Bill Gates and Zuckerberg, they're a little more robotic, I would say.
Yeah, and I mean, I think that that's something that you touched on that I also think is very important. That I think that if you want to have a creative enterprise, like a lot of that is nurtured in things like levity and not having over, it wasn't Microsoft, Facebook, where does a lot of their like, creativity come from? Mainly acquisitions,
Mm-hmm. You're right.
like that's the primary. But he just kind of like spits these businesses out like it's second nature. And he just like gave away the Hyperloop. He was like, here's the idea, go for it. That was one that he had that he didn't even have time for. So yeah, it's innovation is the lifeblood of any company. And sometimes like, I've been advised that I tell too much about Prospero and how Prospero works sometimes. And my response to that is like, I have more ideas. Like
Mhm.
this is just what I could build now. And by the way, we've only raised $200,000. So my backlogs of ideas is pretty big. So no, I'm not worried about that. I'll tell people what they're building now. Like, good luck knowing what we're going to build next, and good luck like stopping us from innovating more when I've been spending my whole life doing it and like building cooler shit. Like, the really cool thing that happened, actually, I think maybe it was a week or two ago, and I don't even know if I said this. I'm really happy about it, obviously, but someone that was like very senior at a retail innovation broker, very well known for it, was showed our new interface. And the response was from someone that's vetting us to invest. The response was, we're working on something like this, but this is way better. And the question was then put to me, like, why do you think you're able to do this? Why do you think you're able to, build things that, organizations with like much more capital can do? And I think there's a few reasons. The first is that, we have funded a lot of this company by people working for equity. And, some people kind of view that as a negative thing, but, in my mind, it means that people believe in it when they work for equity and they believe in the mission. And if people believe in a mission, they do better work. and they believe they're given space to grow and create and things like that. And, we've seen it, like, there's no more classic example than, how many wars are won and lost because some side had the better cause. It happens all the time. And it's the same thing. It's just like people that are aligned with a mission and believe in what they're doing are just going to do whatever it is way more effectively than people that aren't. And I would say the second part of that, and it's something that I will always do, and it's things that, we do here and a lot of what the signals in Prospero were built on, which is just that, like, I still talk to retail investors every day. Obviously, we started this new Discord where I've like scaled that up a little bit. And I always did that. And the difference between like these large entities is like, yeah, maybe they read surveys 10 levels down or like whatever, but they're all playing a game of telephone. And by the time it goes from like whatever some retail investor is saying to the decision maker, like at the top, who's going to be making broad level decisions about the product, they're so far removed from the actual person that's actually going to use it and really what it is, because it's been extracted by so many executives on the way up. I'm always talking to like people on the ground floor, and I'll always do that. And that's, I think, one of the reasons why we will continue to be able to innovate, because I think it's important to, not only speak to the people that you're building something for, but get to know them, and not just in a sense of like stocks, but get to know them personally. Because if you get to know people personally, you get to know a little bit more about why they're telling you the things that they're telling you, and how to really help them, maybe in ways that, they don't even know. And I think that that's the really important part. When you get to know someone and you get to know their situation and what they really need, sometimes you're able to help them in ways that they express to you.
What a powerful message. And it's just, Prospero is going to keep building, and it's a beautiful thing. But what's not a beautiful thing is AMC and APE got a negative ruling last Friday, I believe. And we mentioned these two stocks a couple of weeks ago about how they were trading off of each other. So what's your update on that?
Yeah, it was going to look like I was going to take a much bigger hit on that one than I'll see the live update, because over the weekend it was pretty bad. Let's see, live, it's going back up. It was at one point down a lot further, but it's back at 28% up, but at one point it was up 80% post market. And the thing about that's so interesting, and I wrote about this in my newsletter, is the reason, not only did the special master, I'll give some people the background on the situation. Basically, and for those that don't know, I was an early investor in AMC, before it rallied. And if you go to my personal Twitter, it's actually pretty interesting. There's and you should definitely screenshot this for it. I called the short squeeze 2 days before it was going to happen. I pinned it to the top of my thing because I knew that stock inside and out. So I keep that pinned to the top of my Twitter. But basically there was a lot of dilution, and it makes sense when the stock goes up and you're in debt, there's going to be dilution. I don't know why some people, and there was so many things that people didn't really understand about that situation, in terms of how companies actually function and how short squeezes aren't necessarily good for them and they don't really want to help. But anyway, the company, the CEO, Adam Aaron, voted again, put up a vote to issue more shares. The majority of retail investors that wanted a short squeeze voted against it, but they're in debt. And then he figured out a really interesting workaround, which, by the way, I did mention they had preferred shares to do that. One of the things that I got criticized for the AMC community was actually pointing out that they did have those preferred shares to dilute with. So I turned out to be right about everything there. But I wasn't right about this. And that's the really interesting thing. I still might be right eventually, but basically he went around the backs of retail investors, created these preferred shares, did this kind of pretty slimy thing to say non-voters he got to vote in absentia for. He also diluted with APE shares so he could kind of rig the vote. It's very, very interesting, and he deserved to be sued. But he did get sued by Allegheny County, which is a big pension fund. But the interesting part about it is, and this is the thing where I started to be like, okay, this is unprecedented. I've never seen it. I mean, that part, yes, there's a settlement. Basically, there was a settlement with Allegheny County. They did that. And then Judge Zern, who I think didn't want to take too much heat for deciding the case, actually hired a special master to rule and get an extra advice. And the special master asked them to essentially, you know, pass the settlement. And what was weird is, in the first place, I can't believe, like, you know, the main plaintiff, the one who sued Allegheny County, and AMC settled, and that alone, the fact that they did that, you know, it kind of wasn't accepted is very interesting. And then it got more interesting when the settlement offer got rejected, which I was not betting for, especially because the special master that was hired as an outside said the settlement should be accepted. But now, like, what makes it really interesting is, like, AMC is likely to go bankrupt if they don't get this conversion, because I would say that with APE trading so much lower, which is the preferred shares trading so much lower than AMC, I would say that they are unlikely to dilute at that lower price. So the situation that we might get ourselves into, if that's the case, is basically like they can't raise capital. They don't want to dilute the lower priced like thing that they can dilute, which is APE. And they might ultimately file for bankruptcy. Like, and that's the thing people don't understand. Like, I've been on the other side of this, where a company will trip its leverage ratio covenant and just file for bankruptcy because that's the easy thing. They can have cash in their books. These covenants are what they are. So some people I've seen point out and say, like, oh, there's cash. It doesn't matter. That cash is just part of a financial test that if they fail, which, by the way, they could do things to basically like not stop themselves from failing, and then they're bankrupt, and they might decide that that's easier than dealing with the retail investors. And to be honest, it might be really necessary if they can't raise more capital, because their business is not a good business anymore. And like, it's crazy to have it going up enough with like all this writer's strike and like actors strike. Like, their content is about to get like another big hole in it. Like, so for the stock to be going up is pretty funny in light of that situation, especially. Like, obviously there's all these AMC investors that are still excited about the squeeze, but it's very interesting because, like, you know, you could say that denying the settlement is, you know, for the retail investors, but on the other hand, you know, they might end up getting wiped out to zero. That might happen imminently because of this ruling. So it's a very, very interesting situation. And like, the one thing that I hope most retail investors take to heart, and it's the one thing that was kind of sad about like what I think my situation was when I observed it, is like, I've seen a lot of AMC people, GME, I've seen them turn into the people that they supposedly hate, where, you know, now like these investments have gone down like 70, 80% in the case of AMC, like probably less today, but they're still recruiting people saying, oh, it's about to squeeze. The squeeze is going to happen. Like, you know, and it's just like going to happen forever. Well, the thing is, it already did happen. The stock went to 70. That's like a minimum 10x return for a lot of, like, you know, a lot of people that I knew, maybe more, maybe less, you know, and it's just like, that was your squeeze. That was your moment to make the money. But everybody, once it went up to 70, they were like, 70 is not enough. I want 100. I want 1,000. I want 1,000,000. And it's like, with that kind of attitude, like, you'll never be able to like make money, and you'll never be able to do it. And for anyone that wants to stick it to Wall Street, like, I've got news for you. The only way to stick it to Wall Street is by making money yourself. They don't care if you lose money, like many have on AMC, and they make money. You did nothing to stop them. You played right into their hand. And increasingly, what I've heard is a lot of Wall Street will actually like short stocks, buy call options, make money as they know retail will charge in, think it's a short squeeze. When it goes up, like, sell their call options for a huge profit, then continue to short it, and then make money on the way down, both ways, because they know exactly what retail is going to do. And if there's one message I can pass on to retail, that's the most important thing, and I do it again and again, is never show your playbook. Once they know your playbook and you're doing the same play, you're going to get beat every time. Even the smartest hedge fund people that have a trade that works, they'll only do it so many times in the same way or whatever, because they know it has a lifespan. And I see so many people fail at that. And it's, you know, it's sad to see it go in this direction, because the other thing I was alluding to is now you just see all of these meme stock people like recruiting people nonstop, saying the short squeeze is about to happen, pulling in people constantly. And that's exactly what hedge funds do. They go online, they sell people on trades. The fundamentals of the trade aren't great. They're just trying to get people to do what they want, buy their stock so it goes up. It happens in crypto all the time. So if you find yourself doing that, maybe rethink and maybe think about selling someone on a stock that you think actually has really good growth potential as a business instead of, hunting for these short squeezes, these big bucks, like these quick bucks all the time.
Yeah, I don't think retail investors realize how much of a dirty game the stock market really is, and how the goal of the game is to make money, and it's a solo player game. So it's like you can team up with other investors and whatever, but at the end of the day, you're in it for yourself to make money, and that's everybody. It's not like a secret. But I wanted to ask you about the CEO of AMC. It seemed like the actions he's taking are really against his investors. So is he doing them for himself or for the company? Who are they self-interested in? Like, what are these moves going to benefit?
Touched on that. I honestly don't think, like, other than the ape stuff, that he deserved to get sued for. That was some shady stuff. But in terms of being in debt and your stock going up to 60, that's actually what he's paid to do. Like, the stock's going up. He has an opportunity to raise capital. He helps the solvency of his company. That is his job. Like, and what most people, everybody's like, oh, they want the stock to go up. He wants a short squeeze. Like, I've heard so much bullshit about it. But no, he doesn't. Because what happens in a short squeeze is it goes way up, everybody pulls out, and a lot of times the stock ends up lower, as we've seen, like, than even if there was like a steady gain. And so, like, yeah, I wouldn't say that's the case for AMC in particular, but, like, if he could have stabilized the stock, sold more, stabilized the stock more at like 20 or 30 and brought in more long-term investors. Like, my biggest critique of him actually is that he didn't, with all of that new capital and all of that interest, he didn't find out a way to make the actual business more exciting.
Barbie
That's
can't
my biggest critique of him. He doesn't have any new ideas. He's a very mediocre everybody was like, there's a lot of retail investors that made him into a hero. He's a thoroughly mediocre CEO that definitely pulled some shady stuff with his ape stuff, and I'm glad he got called out for it. But overall, he's just mediocre. He rallied these people behind his cause, which is really important, got them all to trust him. That's actually your job as a CEO, to get retail investors interested, get any investors interested. But yeah, in terms of his ideas, some of the games he plays, in terms of like the shorts and everybody talking about naked shorts, I watched that. It was really some of the stuff he does is like pandering to such an extent, it's kind of nauseating. But in terms of his actual, the way he's run his business, I would say the ape stuff is the only thing that I would call kind of shady, and gross. But other than that, he's a mediocre to bad. And some people got excited about him buying a gold mine, and that was a really weird thing because everybody was like, oh, it's a great investment. I was like, he's not a private equity firm. He's a goddamn movie theater company. That's not his job. His job is to use extra money he has to make the company better, not buy some gold mine. It's insane. That's that's a different critique. But no, he's a mediocre. He's a mediocre CEO, kind of an unremarkable person. But yeah, that ape stuff is just and most everything is just the thing that always drove me craziest. And I don't want to get off this because I could talk about it forever. But the thing that always drove me the craziest about him was everybody was talking about what a genius he was and what he was doing and all this stuff. I was like, this is the first company you covered, right? How many companies do you actually get to know the CEO? And most people, this was their first company, maybe their second band or the one. It's as someone that studied a lot of CEOs, we're why do you only know one CEO and feel qualified to talk about how good of a CEO this guy is? It's crazy. And it's just this thing is dragging out, and it's going to be, it's one of the more interesting things I've ever seen, but I'm looking for my exit from it. It's been too crazy. This stuff is nuts. And I am shocked, and the market was shocked. One of the reasons I found it acceptable to short AMC was that it has zero net option sentiment. So no one was expecting this to be the ruling. And how could they? When you hire a special master to help you with a ruling, the idea is that you need help and you're probably going to go with their ruling. The whole thing is just so weird. Between the special master, there being a settlement with the main plaintiff in the case that's a massive pension fund that worked for the company and the plaintiff. It's just crazy. I've never seen anything like it.
Yeah, I'm sure it's not the last time we're going to talk about them, but to spin to the earnings this week, which I think it's the biggest earnings week of this quarter. I know we have Microsoft, Meta, Google all this week, and I think we wanted to touch on a few of them and give some of our thoughts.
Yeah, I mean, it's those are going to be obviously with all the AI, those are like the biggest AI names. So like we're actually going to start to see how much like, and we've talked about this a little bit, how much is just hype or how much, especially when they talk about guidance. This is what I would look at for people. Like if you just see earnings reported and they beat earnings, maybe you want to hold off a little before you hear the guidance, because all of the stuff that's getting priced into, I would say, especially Microsoft, we talked about this, like Microsoft and Apple are trading at 32 times forward PE. Google's trading at 22 and Meta's trading at 25, which is absolutely insane because like I would consider both of those companies as good, if not better than Microsoft. And there's all this open AI speculation and everything like that. But to take it back to the numbers, if they start to forecast, more money into these AI businesses and it starts to become more tangible and you see tangible growth in anything other than like, cloud. Obviously, cloud for Google and Microsoft is huge. And, the more people are thinking about computing, the more, computing power that's there. But like also like what a lot of people actually don't know. And like I was talking to a pretty smart person the other day that didn't know this, is like he was pitching me like all these ideas for like, oh, using chat GPT to make this app or whatever this app. And finally I was just like, why do you like the idea of building apps for Microsoft so much? I was like, what are you talking about? I was like, are you aware? Like, do you know what ChatGPT costs? He's like, yeah, it's free, or there's like a $20 API. I was like, do you know what it really costs? He was like, no, what do you mean? Well, the biggest reason that OpenAI, when they had such an amazing process, would sell to someone like Microsoft, they weren't dying to give up control of their company. Like, the biggest reason is they were paying for all of that computing power. And Microsoft, they needed a big partner to help them grow and pay for it. So back to that story, like if you scale an app with ChatGPT, you actually have no idea what your long-term profitability on it is. And I would say the more you're dependent on it out of a box, the more you are just building an app for Microsoft. And there was another pretty funny story that I actually had with ChatGPT, which is that like I'm normally a pretty polite person, like just by nature, because it's just the better way to be. It's like good to just ingrain myself into doing that. And so even with ChatGPT, I say like please and thank you when I'm asking it to do things. And then like the other day I was asking it to build a PowerPoint presentation, or a few days. And for anyone that doesn't know how to do this, you can reach out to me. It's pretty cool. Is you can have it put in Visual Basic code that you can then grab the Visual Basic code and it will actually build a presentation for you. And it kept on like doing all of this overlapping text when I was doing that. And I was getting annoyed because I kept on saying, don't let the text overlap, like over and over again. And, finally I was a little mean to it. And like started like, I was like, you're just wasting my time. Like, oh, this is the last time I ask you, like, just like do it, or like you are not like, I might have like said, like, you're not as good as you say you are, you're lame or something like that, something to that effect. And it actually did better. And the last 3 times it actually did very similar jobs, but it changed. And so this is a little hack for anyone that uses ChatGPT, I think, which is just like, yeah, their goal is to probably answer your question with the minimum amount of compute possible and just see if it can satiate you like that. But if you get angry, like that is a very logical way for it to say, okay, I better like spend a little more computing power on this. So yeah, I absolutely think that's a real thing. And so yeah, if you find yourself ever getting ChatGPT not working the way that you want it to, maybe try getting pissed off at it. But maybe you want to try my whole approach where you have like a range of emotions. Start out very nice, get a little angrier as it starts to like fail you. But no, I think that's a real thing and it makes sense from a computing approach standpoint as well. And I just think the other thing that people like might not know that I just think is really funny is like ChatGPT from interacting with us is getting less accurate. I think it's actually gotten less accurate this month. Like last month, I think this month was like the first time the users went down. So like we are making it stupider. And that is just hilarious to me.
That's pretty funny. Did you say in the beginning that Meta is still the lowest PE out of all the big cap tech?
Google has a 22 like 0.61, I believe, forward PE ratio.
Wow.
So yeah, no, I mean everybody's like pricing in some loss of search. And like we've talked about this a lot. Like I wouldn't bet against Google in AI. Like that's their DNA, and they've been working at it a lot longer than OpenAI. Like, yeah, OpenAI has an application. That's great. And Google has like tons of data. Like, I'm not saying that they're like indestructible, but like I'm not sure I would bet on them essentially like 1.5 times more than Microsoft as a company. Like Google has, like Microsoft made pretty much one thing like in the 90s and has been like resting on its laurels like since then. Like Google like innovates and continues to innovate, and like some of the things they did in cloud were like very new, and like yeah, it's like in terms of tech and what they're doing in AI and everything, it's just like I don't know why anyone would bet against them. It'll be really interesting. Like obviously all eyes on the ad revenues. I think that's what, like, when ad revenues went down, that was a big thing, and that's like the common thread in both like Meta and Google. If we see those ad revenues come back, other than, I would say those are the two things to look out for beyond just the hard numbers. I would look out for, their ad revenues, or three, I guess. I would look out for ad revenues. I would look at the cloud component. And then I would also look at just like how much new revenue is being built in from AI specific products and services.
It's always been amazing to me. I think the last like 4, 5, 6 quarters, Snapchat has reported like a week before Facebook or Meta and Alphabet. And this like second tier social media that's like a 5 billion or $10 billion market cap moves these hundreds of billions and trillions of dollar companies like 5, 10% based on their ad performance. It's kind of crazy. But I guess that didn't happen this time because I haven't seen Snapchat earnings yet.
Yeah, I don't know. That's an interesting. I've definitely observed what you're saying there, but yeah, it hasn't. Yeah, that's a very interesting. That's a very interesting thing. But yeah, I mean, I would say the like I've heard a lot of people say like yes, like, and that's the one other thing. Like,
Snapchat's
if you
coming.
see those stocks going down, like, or up, I would be bullish or bearish based on that. A lot of people are basically saying they're going to move the market, and they're going to move the market for those reasons I just said. Everybody cares about AI. Everybody cares about cloud in the context of, if cloud is growing and they're projecting growth, that is like kind of inherently some of these AI businesses, and just like more computing capacity to run the AI is going to be embedded in that projection. And then, yeah, obviously the ads more in the short term is going to be something that people really care about.
Mm-hmm. So in the past week or so, we've kind of noticed that the S&P has started to outperform the Nasdaq just in the last several trading days. So is that something to out for going forward? And is that a trend we're going to see continue to develop? Or what are your thoughts on that?
Yeah, I actually am going to look, because I actually haven't. I've been negligent. I've been so caught up in some of these other things that I haven't looked at QQQ and SPY net option sentiment were converging, which is very interesting. I almost never see that. Okay, so yeah, QQQ is at 38 and SPY is at 33. And like even recently, I've seen QQQ net option sentiment at like 55 and SPY at 6. Like that's the biggest gap I can remember. But yeah, like I reevaluated this a little bit, but I would definitely say that the SPY, like, I think what I was saying to you before this is that I think people are starting to say like, okay, I think this might be a bull market, but also like this tech got way overvalued. We're getting a little correction, but what we're having is like a correction there. And then all of these stocks that people are accepting are a bull market, when all the new dollars went into those, I think there's some selling of tech and then selling of like some growth and profitability stocks buying. Like we saw bank stocks have an amazing month last month. And I think that's people starting to say like, surprisingly, they're less worried about the credit crisis that we've been talking about. Or part of it could be like, we're going to see like, these higher interest rates profits, like just like basically come in and maybe they'll sell before the credit crunch really hits. But yeah, banking has performed really, really, really well. BlackRock, for the first time, we put in our like bonus picks. And I never really do financial stocks, and I've been avoiding them for a while, but it actually had some really good upside to downside breakout ratio. I think it had like a 78 net option sentiment, which is one of the higher ones I've seen for bank stocks. So yeah, I think that's what we're seeing. We're starting to see people take some profits out of these tech stocks and say like, okay, now I think the rest of the bull market is going to start to come into some of these stocks with, I would say what you're looking for is, and what to look for in Prospero is stocks with, growth and profitability. I would look for, sometimes we talk about the total. On this specifically, I would look for above 60 in both.
And what do you think is there a chance that the tech rally could go higher? Like, is it purely based off this earnings season?
I didn't sell Tesla or Meta or Confluent in my model portfolio, which are heavy tech. And that's just because like I can't bet against it the way this market is going. I kind of suspected there would be a correction, but what I did to manage that is I just shorted more tech stocks that I didn't like. That's how I controlled for the risk there. Because who knows? Like Tesla could keep going up. Yeah, it's overvalued, like, quote unquote overvalued, like high RSI, blah, 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 that stuff. Like that doesn't matter if people are bullish in the market and they just want to like, where Tesla went before it started to go down. What was it? Like, what was its high? Like, it was insane. Like, I think in the 600s or something. Like, and it's a better company now than it was then. Like, yeah, we can look. We should look because it was like pretty crazy.
Yeah, now you're
I'm not
closer
sure if it
to
was.
the Cybertruck and the robot and all these things coming
I don't know.
out.
I was
Charging
thinking too
network.
much. It
Well,
peaked at 414.50.
the
But
stock
like, yeah,
split, so it might have hit that
yeah.
before the split.
Yeah, it was. No, this is controlled. They always control for. That's what I was remembering on the higher
Okay.
thing. When you look at historical, they control for the split. So yeah, I think it was in like the 800. So like that makes sense. But yeah, 414.50 was the high. And that was in 2021. And they have a way better business now than then. So like, can I really like wrap my head around betting against them? I don't think so. Like, I'm not ready to do that. I might take a little lick here, but I think that's a price I'm willing to pay.
Now, here's a question I have because Tesla kind of went down off their earnings, and I think I looked this morning and they were up today. So, if some of these big cap stocks went down 5-10% on the earnings, would you like pull a 3-day rule, let it settle, and then buy more and buy the dip?
Maybe. Like it really depends on what I said in my newsletter. It really depends. Like we can see like what it depends on the signals. Like, and that's the thing that like that's the thing that I like always settle on, where it's just like for me, like, obviously I built Prospero and we have a great team and there's a lot of people that help, but like these are all essentially like the signals that I really believed in and believed that they would really help people. So like to me, like I don't know, like I can't wrap my head around like my own fears about the market, ignoring like Tesla right now is 94 upside breakout, 99 net option sentiment, right? I can't like really feel good about selling. Like I'm not trusting my own signals. I'm telling people to trust them. So, they're not always right. No signal is always right. But like at the same time, I'll adjust around that. If I see that start going down, like, same thing. I got to trust them both ways. Like even if I did like Tesla and I saw net option sentiment go down to like 70 and upside breakout, like not to rocket up as it did last time, because last time I went to 70 and upside breakout went to 100 and I was like, no, I'm staying in because I can tell there's still people making big long-term bets. But at the end of the day, I got to stick to that,
Mm-hmm. Yeah, I see a couple people are in here, and I just want to say, like, if you have any questions, we have about 10 minutes left, so ask away. We'd be happy to answer any. And so the thumbnail I made for this, I put, are we getting bearish signals? And I wanted to ask you to update your end of the year type of stock market prediction. Do you think we've hit our high for the year so far, like for the rest of the year?
The high, I don't think so. Like, maybe, like it depends. But I mean, what I've consistently said and I will stick to is I could see like the QQQ being up. And like obviously when I first started saying that, it's become more true and it would be hard for that not to be true. And the SPY being down. Now with the QQQ up so much, like, yeah, that might not necessarily where it's still up from here necessarily, but that'll still be accurate. But no, I just like overall, it just seems to be like, this AI thing has buoyed the market. There's a lot of people that have like a lot of shorts capitulating. And it's just like, if you think about the psyche of some of this stuff and like the people that shorted the market, right? Do they have the guts to try to short it again when they've already like lost so much from
Funds.
shorts this year? I don't know. Like I certainly wouldn't. So like maybe they'll decide to go long. Maybe they'll like take some profits here, try to get some momentum shorting and then go long. I don't know. What I do know is that there's a lot of momentum here and kind of like a lot of like, the longer term technicals that I read are still bullish. But what we always say obviously is um kind of macro events that change this.
Speaking of macro
But
events, what about
yeah.
all the fear in commercial real estate and the real estate sector and all of like that was all I heard about for a month or two, and now it's just crickets. No news on it. Is that just gone now?
No, I mean it's still there, and I think that like I think the other thing that I've been reading a lot about and like looking at myself is like Airbnbs and how they've changed kind of some of like the housing stock, and kind of flooding the market, but also kind of taking away some other housing stock that people depend on. Um, I definitely think there's trouble in real estate coming. Like whether that's enough trouble to really harm the economy or just like a needed correction, like any market that just gets so overvalued, that I don't know. But I think what we're basically seeing is like and there are some credits like Jamie Dimon, continues to kind of say this is a very, very interesting time because I'm seeing lots of exuberance and then also like in the market overall, but also lots of variables that are very concerning about credit. And I'm like right there with him. And it's really hard to odds make because we don't necessarily know the full impact. And a lot of it, and like we talked about it, is it's very hard to predict because we can say, okay, there's some personal credit coming. What we can't say is like how much it's going to cause people to sell stocks. How much how much the economy will be able to handle that, like if there'll be other solutions, if the stock market will kind of keep going up enough that people's stocks will like give them profits that they can handle it with. Hard to say, but like definitively anyone I respect is pretty clear that there is trouble coming in the credit markets sooner or later.
Mm-hmm. So in your newsletter, you wrote bear correction coming question mark, and then the markets are so tough to read this week that for the first time ever, we are reserving the right to adjust midweek. So what did you see in the signals specifically that made you do that for the first time?
Well, it was that behavior. Like thing number one was like the SPY net option sentiment going up and QQQ going down, which I've never seen, and they're converging, and I've never seen that behavior. And that's very weird. And that made me uncomfortable just on its face. Then we have the thing that I basically said, which is like, obviously we own Meta and we own Tesla. And I'm not just like going to stick around and wait for them to like tank, like, based on a shift in the market, like in terms of our newsletter. I'm not going to like, that's silly. Like, especially with how jittery the market showed itself to be last week. And yeah, like we strive to be able to make like the like one of the reasons we did them this way and we just changed once a week is we want to make it easy enough for anyone to follow, really. But at the same time, we can't take on significant risk or significant risk of losses just to make it that accessible. Like, and I do think that's a fair way to look at it, right? Like right now we're 7 months in and we've held everything up for the week. Like I do think it's fair to be able to say to people, okay, this week pay a little more attention, or maybe investing's not for you.
So I have a question now based off of that, and I don't know if you've probably thought about this before, but this whole like Prospero model portfolio, it kind of reminds me of like Kathy Wood's ARK fund. Like, would you ever think about taking the portfolio public as like an ETF?
We're very secretive and protective of our signals because we don't want people tracking us. And my big thing and why I think it really like why our signals continue to work is that people can't track them. And we're not making investments. And so nobody really knows what they're doing. They can't reverse engineer what we're doing. They can't short what we're investing in to punish us, like, because we're very quick to change. It's not a very good long-term solution because we'll just start recommending something else. And then they're entering maybe these expensive positions to do that. So we kind of have the upper hand there.
And
But
you lose that if you go public? You have to disclose everything, I guess.
yeah, or they can see and you can see your constituents. I mean, someday we'll be an asset manager, but I kind of believe there's only two ways to really help people. The first is just like to support what we're doing now, to support their existing research process, not force them into trades that they can't, that are beyond their like that they can't afford or beyond their risk tolerance or anything like that. Or if it's going to be us on the line, like that's why I do the newsletter picture. If it like at the end of the day, if it's going to be our, it's going to be my name on the line, I'm going to be doing the trades. And like, it's the same kind of thing. Someday we will offer full automation for people once we've like earned the trust and like shown how the sausage is made, so to speak. Because AI makes people uncomfortable, and it should. And by the time we're saying, hey, trust us, hand over your money, we want people to like be able to see exactly how the predictions work and get on a level of comfort with them. And that's why we pursue the strategy in that fashion. So yeah, basically we're in a spot where someday we'll do it, but we're not trying, we don't half-ass anything. So by the time we actually do that, it will be like not some ETF. It'll be like we will just invest people's money, and we won't necessarily need to make it like public what we're investing in or everything, but will be something like, you know, a people's hedge, you might call it.
So that's all I have for today. I can't wait for next week. We're gonna have so many. We're gonna have trillions of earnings reports to cover next week. Trillions of dollars worth.
Oh yeah, next week is actually a special one. We're actually, for anyone that is tuned in, we're actually having a bunch of our users come on and say how they're using it well. So we might have a little bit of a crunch on the rest of it, but it'll be really interesting to hear how people are using it, using the platform that aren't me.
Yeah, that sounds great. All right, so we have questions. I don't know, we have a couple people watching, but I guess they were just here to be entertained and educated for the day.
Oh, I thought you said no. I thought you said you had questions. I guess we have no questions. Okay. Well, if there aren't any, we only had 3 minutes left anyway, so I think we're probably good.
All right, we'll see everybody back here next week. Special meeting with some users.
All right. Awesome. Thank you. Bye-bye.
See you, George.